Hi folks, welcome to the Weekend Investing Daily Bite of 28th of August. No place to hide today. As we were mentioning on Tuesday, the market's back seems to have been broken by this additional tariff. I think the market was till the last date expecting a U-turn by the US president. That has not happened. In fact, uh, we have probably rubbed more salt into their wounds now by not even responding to their requests. So and the narrative that has been sent out by the government today has been that you know there won't be severe damage. So that is very unnerving because the government is accepting that there will be significant damage but may not be severe damage. So that has spooked the market completely, and it will take some time perhaps to find some you know some grounds where people will come to terms with this. Some important support points are nearby, and we can only hope that those support points will hold. Let's look at some charts. A disclaimer, as always, please read fully and understand it before moving forward. And once again, a reminder that you need to add the Weekend Investing WhatsApp channel to your WhatsApp app. All the important announcements are coming there. So if you are following Weekend Investing, certainly use the description link. And of course, subscribe to the YouTube channel. We are working very hard to bring you some great videos, and let's see where the charts are headed. So as you can see on the chart, it's almost like a waterfall event that has happened in the last 4 or 5 sessions. Prior to this fall, this rally was, of course, basis the GST announcements, and that have been completely overclouded, overpowered by this narrative that is now taking place. And we are now actually in some sort of a head and shoulders pattern also, and that probably has a pretty dramatic sort of target if it does get activated of nearly 23,000. I don't know whether we go there or not, or whether this roughly 20, 50, 24, 400, 24, 500 support will hold. I'm hoping that it will hold. Market is reasonably oversold, I would think. 4 days of good selling has happened, 0.85% down. And hopefully some incentives for exporters will get announced, and that may, save the day going forward. Nifty Junior also looking very weak, minus 1.29%. Again, here you can see that it's a sort of a very distributive kind of pattern where, and the neckline has been established below which some panic can happen. In the mid cap space, we are already near the lows that was achieved in beginning of August. So a pretty stark looking chapter here as well at minus 1.21%. And in small caps, we are down 1.1%. Again, the chart is not looking, you know, eh, anywhere near even good. It's actually a very poor chart right now that we are seeing. In the bank nifty space, it's actually leading the market. The said head and shoulders pattern has already happened here, and this probably is headed towards some perhaps 52, 52 and a half thousand mark basis that pattern. But there is a gap, huge gap that is there between 53,500 and 54,600, which is currently getting filled. Below 53,500, of course, there will be more panic selling. But this again on a daily chart and on an hourly chart is reasonably oversold. So some bounce can happen if there is some announcement. Gold has been moving up. As always, when markets move down, gold moves up. 10,145 per gram is the gold price. And you can see that since the market started to move down 4 or 5 sessions back, gold has started to move up. So there's a very strong inverse correlation always with markets and gold. Advanced decline trends are actually a bit disappointing, where you can see that advances started to rise after the start of the day, but then post midday they started to fall back again. And by the end of the day, it was a poor 101 advances to 400 declines. So the grip of the bears is very, very strong right now, which bulls had attempted to weaken in the first half of the day, but did not succeed. In the heat map, there is hardly any green to talk about. There's only red. HCL Tech, Infosys, TCS, HDFC Bank, ICICI Bank, Shriram Finance. These were the bigger losers. Even Hindustan Levers, ITC, Tata Consumers all were down. In the Nifty Next 50 space, also a lot of red Indigo crashed 5.34%. Hyundai down 2%, JSW Energy 3%. You had LIC, IRFC, PFC, Canara Bank, REC, all were down quite significantly. Some stocks bucked the trend and were reasonably flat, but most of them were down 1 to 2%. In the movers of the day, we have Ola again. So Ola jumped another 8% after big moves in the previous sessions. So certainly something is brewing there. And stock has gone from 40 to 55 rupees in a matter of 7 or 8 sessions, especially in a period where markets are weak. So whenever markets are weak, but a stock is showing strength, that is a relative strength performance, and that always should be monitored for potential setups. Indigo, of course, uh, completely smashed down. Rakesh Gangwal has sold some stake, and 5,000 crores got traded. And the stake selling from a promoter is always a negative news for a stock, and that stock is down 5% today. In the sectoral trends, nothing on the green. In fact, I should have colored it red. 2.6% on capital market. So, capital market stocks led by Bombay Stock Exchange are unraveling. Um, the outcome or diktat from the regulator on weekly options is not yet out, but that is the concern going forward. And also the concern that markets may take some time to come back up is causing these concerns. India tourism down, defense down, IT down, real estate down, all 1.5 to 2%. Then you had financial services, banks, PSU banks, FMCG, private banks, all between 1 to 1.5%, and others between 0.5% to 1%. So no place to hide at all in today's market. Capital market, as you can see, has broken uh, the support here and is coming down rapidly. 2.6%. MCX 360, Angel One, UTI, and Nippon all moving down. Tourism also on the back of fall in Interglobe Aviation, and of course IRCTC and EIH also falling. Jubilant Foodworks and Indian Hotels. So you can see the some kind of a double top has also been made in tourism. So no trend is really lasting right now, and we are back to phase one. Tweet of the day. I had this recently. I tweeted about this Bitcoin situation where MicroStrategy, as you all know, is accumulating Bitcoin in a very big way on a leverage, and they are one of the biggest holders of Bitcoin right now. Now, $70 billion worth of Bitcoin. So when the leverage starts to bite, it can really take a huge chunk out very, very quickly, and that can cause a reverse of a exponential rise. So it's like a waterfall crash that can happen, and it can really nuke the market, as this tweet suggested. So my thoughts on this was that regardless of where Bitcoin goes, there are always some elephants in the room. People who have huge stakes, leverage stakes, and the market must never come to know of them. So if you are, let's say, building a position in a small cap stock, you have to make sure that the market doesn't come to know of your position or a futures position in some stock. Because once you are identified, eventually the market will bring you down. That has been the case many times over. So MicroStrategy and Mr. Saylor are really skating on very thin ice, and this can really collapse in a big sort of pack of cards, because the show of hand should never be done. Your leverage should be your private affair, and once that leverage is out in the open, there are others who will try to bring you down. So that's where the elephant in the room context comes through. At 8 p.m. we are going to do another video. Did you win the stock market lottery? It will have some behavioral aspects of how we view the markets as a market lottery or not. So do watch that video. If you liked this video, please do like and share this video and subscribe to the channel. And I'll see you at 8 p.m. Thanks. Bye.